Hello, and welcome to Boni's Life, your premier destination for navigating the intricate and often turbulent waters of the global financial markets. I'm your host, Boni, and today we are embarking on an in-depth exploration of the cryptocurrency market. In this episode, we will dissect the past 24 hours of market activity, a period that has been nothing short of electrifying. We will delve into the fundamental and technical drivers that have sculpted the current landscape, providing you with the kind of advanced insights and actionable intelligence that you simply won't find anywhere else. Our mission is to deliver clarity. We'll examine the global events that have sent shockwaves through the trading world, analyze the precise impact of these events, and project potential scenarios for the next 24 hours. We will identify key technical triggers and outline sophisticated trading strategies, all backed by real-time data from the most credible sources in the industry. This is a masterclass in crypto analysis. So prepare to be informed, enlightened, and ahead of the curve. Let's begin. The global cryptocurrency market has experienced a significant surge in the last 24 hours, with the total market capitalization climbing to an impressive $3.63 trillion, a notable plus 1.1% change. This upward momentum has been accompanied by a substantial rise in trading volume, which now stands at $198 billion. This influx of capital and trading activity signals a renewed sense of optimism and conviction among investors. The market's resurgence is a complex interplay of catalysts, sentiment, and technicals. Bitcoin, the market's bellwether, has reclaimed the psychological $100,000 level and is currently trading at approximately $105,060, marking a plus 0.8% gain. Ethereum, the leading smart contract platform, has demonstrated even greater strength, rallying by 5.7% to trade at $3,559.30. This broad-based recovery, with 99 of the top 100 coins appreciating, suggests a risk-on sentiment is taking hold. However, to truly understand the dynamics at play, we must look beyond the surface-level numbers and analyze the underlying currents that are shaping this new chapter in the crypto narrative. Bitcoin's recent price action has been a textbook example of a technically driven recovery, reinforced by strong fundamental tailwinds. After a period of consolidation and a dip below the critical $100,000 support level, the price has staged a powerful rebound. The current price of approximately $105,060 places Bitcoin firmly back in a bullish posture. From a technical standpoint, several key indicators are aligning to support a continuation of this upward trend. The 14-day Relative Strength Index, RSI, is at a healthy 54.75, indicating that while momentum is strong, the asset is not yet in overbought territory, leaving room for further appreciation. The Moving Average Convergence Divergence, MACD, is showing a bullish crossover, a classic signal of a shift in momentum. Furthermore, trading volume has been increasing on the ascent, confirming the strength of the move. We are now observing a critical test of the $107,500 resistance level. A decisive break and hold above this level, confirmed by a 4-hour candle close, would open the door to a test of the next major resistance zones at $110,000 and $112,000. On the downside, initial support can be found at the $104,000 level, which corresponds to the 0.236 Fibonacci retracement level of the recent impulse wave. A break below this could see a retest of the $102,000 and $100,000 support zones. The market structure is currently defined by a series of higher highs and higher lows, the hallmark of an uptrend. The Ichimoku cloud, a comprehensive indicator of support, resistance, and momentum, is also painting a bullish picture, with the price trading above the cloud and both the Tenkan-sen and Kijun-sen lines in a positive alignment. The confluence of these technical signals suggests that the path of least resistance for Bitcoin is to the upside, but traders should remain vigilant for any signs of a reversal or a failure to break key resistance levels. Ethereum has emerged as a leader in this market recovery, outperforming Bitcoin with a plus 1.0% gain to reach $3,559.30. This outperformance is reflected in the ETH/BTC ratio, which has strengthened to 0.0339. A rising ETH/BTC ratio is often a harbinger of a broader altcoin rally, as it indicates that capital is beginning to rotate from Bitcoin into higher beta altcoins. From a technical perspective, Ethereum is displaying a similar bullish structure to Bitcoin. The RSI at 56.2 suggests strong but not overextended momentum. The MACD is in a clear bullish trend. Ethereum is currently approaching a key resistance level at $3,700. A breakout above this level could trigger a rapid move towards the next major resistance zones at $3,800 and the psychologically significant $4,000 mark. Support for Ethereum can be found at the $3,500 level, which aligns with the 20-day moving average, and below that at $3,400. The on-chain data for Ethereum also presents a compelling case for continued strength. Gas fees on the network are currently at a very low 0.107 GUI, indicating that the network is operating efficiently and is not congested, which is a positive sign for user adoption and a potential catalyst for further price appreciation. The combination of strong technicals, positive on-chain metrics, and a favorable macro environment suggests that Ethereum is well positioned to continue its upward trajectory. XRP has been another standout performer in the last 24 hours, surging by an impressive 8.1% to trade at $2.45. This move has been accompanied by a massive 134% increase in trading volume, indicating a high degree of investor interest and conviction. The technical picture for XRP is decidedly bullish. The RSI has climbed to 62.8, reflecting strong buying pressure, while the MACD is signaling a strong bullish trend. XRP is now approaching a key resistance level at $2.60. A successful breach of this level could pave the way for a test of the $2.75 and $3 resistance zones. On the support side, the $2.35 and $2.20 levels are the first lines of defense. The recent price action in XRP is a clear indication that the market's risk appetite is increasing, and investors are beginning to look for opportunities in altcoins that have the potential for explosive growth. The surge in volume is particularly noteworthy, as it suggests that this is not just a speculative move but is backed by significant capital inflows. As the broader market continues to recover, XRP is likely to remain a focus for traders and investors seeking high-growth opportunities. Now, let's synthesize this information into a cohesive market outlook and a set of actionable trading scenarios for the next 24 hours. The prevailing market sentiment is undeniably bullish, driven by the powerful combination of the Trump stimulus announcement and the end of the US government shutdown. The technical picture across the board is supportive of further upside, with key indicators aligning to signal a continuation of the current trend. However, it is crucial to remain aware of the potential risks and to have a clear strategy for navigating the market's inherent volatility. We have identified 3 potential scenarios for the next 24 hours, each with a corresponding probability and a set of technical triggers. The second scenario, with a 30% probability, is a period of consolidation or ranging. In this scenario, Bitcoin would fail to break the $107,500 resistance on multiple attempts, leading to a sideways market. The triggers for this scenario would be a significant decrease in trading volume, a highly imbalanced long/short ratio, and the typical reduction in liquidity over the weekend. The trading range would likely be between $104,000 and $107,000 for Bitcoin, $3,500 and $3,700 for Ethereum, and $2.35 and $2.55 for XRP. The optimal strategy in this environment would be range trading, buying in the lower 25% of the range and selling in the upper 25% with a position sizing of 30 to 40% of your trading capital. The third and least likely scenario, with a 15% probability, is a bearish correction. This scenario could be triggered by a delay or modification of the stimulus check announcement, a breakdown of the government shutdown deal, negative CPI data, or another macro surprise, a resumption of large ETF outflows, or funding rates turning significantly negative. In this scenario, our price targets would be $104,000, $102,000, and $100,000 for Bitcoin, $3,450, $3,300, and $3,150 for Ethereum, and $2.25, $2.10, and $1.95 for XRP. The appropriate strategy would be a defensive one, utilizing hedge instruments such as put options or inverse positions, and looking for buying opportunities at strong support levels. Position sizing should be conservative, at 10 to 20% of your trading capital, with a significant allocation to cash. To further refine our trading strategy, we have identified a set of key technical triggers that can serve as a guide for your entry and exit decisions. For bullish triggers, a confirmed 4-hour close above $107,500 for Bitcoin would be a strong signal to go long. A breakout above $3,700 for Ethereum would also be a bullish confirmation. Other bullish triggers include an expansion of open interest with positive funding, a drop in the exchange balance below 2.10 million BTC, the fear and greed index rising above 30, currently 27, fear, the daily RSI on Bitcoin crossing above 60, and a golden cross formation on the 4-hour time frame. For bearish triggers, a confirmed 4-hour close below $104,000 for Bitcoin would be a signal to reduce exposure or consider short positions. A breakdown below $3,500 for Ethereum would also be a bearish sign. Other bearish triggers include a liquidation cascade of over $400 million in a single hour, funding rates exceeding plus 0.05%, large ETF outflows of over 10,000 BTC in a single day, an RSI divergence on the 1-hour or 4-hour charts, and a death cross formation on lower time frames. In terms of optimal entry zones, we have identified 3 distinct approaches based on your risk tolerance. For aggressive traders, an entry at the current levels of $106,000 to $106,500 for Bitcoin, $3,580 to $3,620 for Ethereum, and $2.45 to $2.50 for XRP could be considered, but this carries a high level of risk. For conservative traders, a more prudent approach would be to wait for a pullback to the $104,000 to $104,500 level for Bitcoin, $3,500 to $3,550 for Ethereum, and $2.35 to $2.40 for XRP. This would represent a medium risk entry. For swing traders with a longer time horizon, a patient accumulation strategy in the event of a deeper correction to the $102,000 to $103,000 level for Bitcoin, $3,400 to $3,450 for Ethereum, and $2.20 to $2.30 for XRP would be a low-risk approach. The liquidation data from the past 24 hours also offers valuable insights into the market's dynamics. A total of $338.93 million in positions were liquidated, representing a substantial 70.13% increase from the previous day. The majority of these liquidations were short positions as the market moved sharply higher. Bitcoin accounted for $110.59 million in liquidations, while Ethereum saw $83.50 million. This wave of liquidations is a natural consequence of a strong directional move and serves to flush out over-leveraged traders. While high liquidation volumes can sometimes indicate instability, in this context, they are a sign of a healthy deleveraging process. The market is clearing out weak hands and creating a more solid foundation for further price appreciation. It is also worth noting the specific assets that experienced the highest liquidations in the past hour. Solana led the way with $1.05 million, followed by ICP with $858,330, Ethereum with $561,540, Zcash with $389,090, and JCT with $363,760. These figures highlight the areas of the market where speculative activity has been most intense and where traders have been caught on the wrong side of the move. The behavior of Bitcoin held on exchanges is another critical on-chain metric that provides insights into investor sentiment and potential future price movements. The current Bitcoin exchange balance stands at 2.13 million BTC, representing a decrease of 4,710 BTC in the last 24 hours. This outflow of Bitcoin from exchanges is a decidedly bullish signal. When investors move their Bitcoin off exchanges and into cold storage or self-custody wallets, it indicates a long-term holding strategy and a belief that prices will be higher in the future. Conversely, when Bitcoin flows onto exchanges, it often signals an intention to sell. The consistent outflow of Bitcoin from exchanges in recent weeks has been a key factor supporting the price and reducing the available supply for immediate sale. This dynamic creates a supply squeeze which can amplify upward price movements. The reduction in exchange balances is a testament to the growing conviction among Bitcoin holders and a positive indicator for the market's long-term health. The Fear and Greed Index, a widely followed sentiment indicator, currently stands at 30, firmly in the fear zone. This might seem counterintuitive given the strong rally in the market, but it is actually a very bullish signal from a contrarian perspective. The Fear and Greed Index is designed to measure the emotions and sentiments driving the market. When the index is in the extreme greed zone, it often indicates that the market is overheated and due for a correction. Conversely, when the index is in the fear or extreme fear zone, it often signals that the market is oversold and presents a buying opportunity. The fact that the market is rallying despite a fear reading suggests that there is strong underlying demand and that the rally is not being driven by irrational exuberance. This is a healthy sign and indicates that there is still significant room for the market to move higher before reaching levels of excessive optimism. Historically, some of the best buying opportunities have occurred when the Fear and Greed Index is in the fear zone, and the current reading of 30 is no exception. The average RSI across the top cryptocurrencies is currently at 54.75, which is considered a neutral reading. The RSI is a momentum oscillator that measures the speed and magnitude of price changes. An RSI above 70 is generally considered overbought, while an RSI below 30 is considered oversold. The current reading of 54.75 indicates that the market has strong momentum, but is not yet in overbought territory. This is a positive sign, as it suggests that there is still room for the market to move higher before reaching levels where a correction becomes more likely. The fact that the average RSI is in the neutral zone, combined with the Fear and Greed Index being in the fear zone, paints a picture of a market that is fundamentally strong but not yet driven by excessive speculation. This is the ideal environment for a sustainable rally. The macroeconomic backdrop is also playing a crucial role in shaping the cryptocurrency market. The US dollar index is currently at $99.44, down 0.03%. A weakening dollar is generally supportive of risk assets, including cryptocurrencies, as it makes dollar-denominated assets more attractive to international investors and reduces the opportunity cost of holding non-yielding assets like Bitcoin. Gold futures, a traditional safe haven asset, are trading at $4,088.76, up 2.23%. The simultaneous rise of both gold and cryptocurrencies is an interesting phenomenon, suggesting that investors are seeking both safe haven assets and risk assets, reflecting a complex and uncertain macroeconomic environment. The fact that both asset classes are rising indicates that investors are concerned about inflation and are looking for ways to protect their wealth. Cryptocurrencies, particularly Bitcoin, are increasingly being viewed as a digital gold, a store of value that is not subject to the same inflationary pressures as fiat currencies. This narrative is gaining traction and is a key driver of long-term demand for Bitcoin. The correlation between Bitcoin and other asset classes is also worth examining. Bitcoin's correlation with the S&P 500 is currently at 0.35, indicating a moderate positive relationship. This suggests that Bitcoin is behaving to some extent as a risk asset, moving in tandem with the broader stock market. However, Bitcoin's correlation with gold is at 0.42, which is slightly higher, suggesting that it is also being viewed as a safe haven asset. Bitcoin's correlation with the US dollar index is at negative 0.68, indicating a strong negative relationship. This means that when the dollar weakens, Bitcoin tends to strengthen and vice versa. This negative correlation with the dollar is a key factor supporting the bullish case for Bitcoin, as many analysts expect the dollar to weaken over the long term due to the massive expansion of the money supply and the growing US debt burden. The fact that Bitcoin is exhibiting characteristics of both a risk asset and a safe haven asset makes it a unique and attractive investment proposition. In summary, the cryptocurrency market is experiencing a powerful rally driven by a confluence of fundamental catalysts, technical breakouts, and supportive on-chain metrics. The Trump stimulus announcement and the end of the US government shutdown have provided the fuel for this upward move, while the technical indicators are aligning to support a continuation of the trend. The derivatives market is showing signs of healthy growth with expanding open interest and neutral funding rates. The liquidation data indicates a healthy deleveraging process, and the outflow of Bitcoin from exchanges is a bullish signal. The Fear and Greed Index is in the fear zone, which is a contrarian buy signal, and the average RSI is in the neutral zone, indicating that the market is not yet overbought. Institutional investors continue to be net buyers of Bitcoin, and prominent figures like Cathie Wood are reaffirming their bullish price targets. The macroeconomic backdrop is also supportive, with a weakening dollar and rising gold prices. All of these factors point to a market that is poised for further gains. However, it is crucial to remain vigilant, to monitor the key technical triggers, and to have a well-defined risk management strategy. The market is inherently volatile, and unexpected events can always occur. By staying informed, by being disciplined, and by approaching the market with a clear and rational mindset, you can navigate the complexities and capitalize on the opportunities that lie ahead. This is the essence of successful trading, and this is what Boni's life is all about. Thank you for your time, and I look forward to sharing more insights with you in the next episode.